Good day, everybody. Thank you for joining and watching this on-demand video for the NSF payments and post-award financial processes presentation. My name is Justin Pohl, and I am the section chief for the Payments and Outreach section within the Payments and Analytics branch in the Division of Financial Management. I have a diverse agenda today that hopefully will be engaging to both new and veteran NSF grantees. And today I will highlight some key areas across both the operations and monitoring sections of our team, update the community on some recent internal agency process and system improvements, and finally, spotlight some recent innovations and opportunities for future engagement. I would like to share a bit about our organization and mission. Some of our longer-standing grantees may have known us previously as the Cash Management Branch, and our branch is under the Division of Financial Management, which sits under the Office of Budget, Finance, and Award Management, led by NSF CFO. Our organization is responsible for overseeing NSF's payment operations, which includes not only grants but contracts, travel, and other administrative payments across NSF. We also conduct financial outreach and engagement with our grantee community and post-award financial monitoring activities, for which we work closely with other divisions under the BFA organization. We operate the Awardee Cash Management Service, and this is our in-house grants payment system. And some of you may use ACMS in addition to other government-wide grant payment systems, such as HHS's payment management system or Treasury's ASAP system. ACMS is a custom system, and it is nearing its 10th birthday next year. One of the advantages of ACMS that our grantees enjoy is that it requires disbursement requests at the individual award level, rather than drawing down a summary advance payment and reporting award level expenditures later through some other reporting mechanism, which is how our previous process worked. As a result, we have eliminated the collection of the SF 425 Federal Financial Report at NSF. But there are a few annual reporting initiatives that we require from our community to supplement some of the missing pieces. Specifically, our annual grant accrual validation, which typically kicks off this quarter in the fall, and our program income reporting, which is actually currently active and due in a couple weeks. For a comprehensive overview of key topics related to grant payment operations and monitoring, I would encourage you to check out our Payments and Analytics website, which has a link here, and look for our Frequently Asked Questions document. This document covers a lot of the topics I'm going to be covering today, ACMS and general cash management topics, NSF critical dates and canceling appropriations, information about program income reporting, baseline monitoring activities, specific questions about SBIR and STTR grant awards, as well as grants made to individual fellows. Our team puts a lot of work into grooming this FAQ annually as our business evolves, and we even use it internally as a one-stop shop reference for common inquiries that we receive from our research community. We just released our FY 2022 version of the FAQ, which is available on our website, so I encourage you all to go out and download it. You can print it out, you can bookmark the link, and we don't change that link annually, so each year when we publish updates, you'll be able to get the latest version. Next, I'm going to take a deeper dive into the payment operations side of our portfolio. We have a team of 5 specialists dedicated to business support and payment processing, who are assigned NSF grantees based on a portfolio of states. Your dedicated points of contact can be found on our external NSF PAB website, linked on the previous slide in the handout. I encourage you to reach out to them for any questions that you might have about payments, refunds, or other post-award financial processes. This process flow on the slide shows our grant payment process at a high level and how your ACMS drawdowns are processed daily. The cutoff for our daily payment schedule is 8 p.m. Eastern Time, so please be mindful of this cutoff when preparing your request. The request must be certified to be scheduled for the next day processing. If it stays in a draft or awaiting certification status, we will not take action on processing it for payment. The following business day, our payment specialists review the drawdowns from the previous night's batches and prepares a payment schedule to transmit to the Department of Treasury. Disbursements are typically scheduled the next business day, at which time Treasury will process the requested disbursements to our grantees' bank accounts. One exception to this 2-day business rule is when we have a large dollar payment schedule, specifically if our payment batch exceeds $50 million in payments for a given day, we have a requirement in order to support Treasury's cash forecasting requirements that the payments for these large dollar schedules are dispersed 2 business days after transmission rather than 1. And this scenario is fairly infrequent throughout the fiscal year, but it is more common in peak periods such as our fourth quarter leading up to our year-end close payment rush, and also in June, which is many of our grantees' fiscal year ends. And so when requesting cash during these peak times, please account for this extra business day of processing in your expectations. On the next slide, I will talk about some of our best practices to minimize delays in receiving funds. These are a few common reasons that could either cause delays in receiving payment or cause your organization to receive less funds than you expected. I summarize them here on this slide, and I'll talk about them a little bit more on subsequent slides. Some transactions require review and approval by a PAB payment specialist before the transaction can be processed. This additional review layer can add time required to process your request and may delay payment. Sometimes this review gets triggered unnecessarily, specifically when your preparer enters unnecessary remarks on the transaction. Remarks field should be only used for communicating items directly to NSF staff. So if you are leaving remarks with the intent of only leaving notes to help your organization identify the purpose of the transaction, and it's not something that specifically needs to be communicated to us, please utilize the internal comments field instead. The use of the internal comments field will not cause any delays in processing because it doesn't require a NSF staff member to review those comments. In some instances, your payment request may be delayed due to an expired or inactive SAM registration. SAM is the system for award management that all of our grant recipients are required to maintain an active and up-to-date registration for. One of the reasons why we require your SAM registration to continue to be active is this is where we pull your organization's bank account information from. And so if your SAM registration expires, we cannot be assured that your banking information is up to date. So before requesting a payment transaction, please ensure that your organization's SAM registration is active, it's up to date, including the banking data. And just be aware that if your SAM registration has lapsed or expired, our accounting system will prevent payments being made to your organization. In some instances, your payment request will only be partially accepted, which means one or more awards for which payment was requested against failed to post or interface to our financial system. More information can be found regarding the particular error or the awards that had an issue in an error message that's contained on the transaction in ACMS. If you need more assistance, you can always contact your assigned payment specialist on our website as well. So an example of this is if your university requested a payment involving 5 awards totaling $125,000, and 2 days later you only received a payment of $120,000. This could be an example of one of those awards that had requested a payment of $5,000 failed to interface. And so what we would do to prevent the majority of the delays is we would process and approve the ones that did succeed and send you that partial payment. And then that would give us time to work with you to resolve whatever the issue was that caused the individual award to fail to interface. Now, I have some exciting news that will be encouraging to our recipients who have experienced problems with our Treasury offset program in the past. We recently received a waiver for our NSF grants program from TOPS, from the Department of Treasury. If you're not familiar with what TOPS is it's a program that the federal government utilizes to collect outstanding debts that organizations or individuals may have. And so if a debt is reported to the TOPS program against an EIN or a Social Security number, future payments that are issued to that individual or organization could be offset to settle that debt. In several instances in the past, when debts from other unrelated agencies were reported to TOPS, sometimes the NSF payments that were being issued to your organization would be utilized to offset that debt. This caused a lot of extra burden and unnecessary impact on the organization's abilities to complete the terms and conditions or the expectations of the grant funding. And so we had sought a waiver for our grants and cooperative and agreements program from that TOPS program. We received that approval and we implemented the exemption in August of 2022. So future award-related payments will no longer be impacted by TOPS offsets. So hopefully you are encouraged by that. Next, I'm going to talk a bit about the post-award adjustment process. 120 days after the end of the period of performance on your award, NSF executes what's called a financial closeout process. This is automated and deobligates the remaining funds from the award, meaning it sweeps the remaining balance and also reduces the award by the amount of the remaining balances so that the award amount equals the expended amount. After this 120-day closeout, NSF grantees have an additional 14 months to submit an upward adjustment. An upward adjustment is basically an additional payment request after the financial closeout. This additional payment request is limited to the amount of remaining balance that was swept at the time of closeout. There is a common misconception on whether a financial closed award needs to be reopened in order to process additional reimbursements, or whether an adjustment request will suffice. Here's a case study to benchmark your current knowledge of the scenario. Your organization recently received a late supplier or subrecipient invoice for costs incurred during the award project period. However, after logging into ACMS, you find the award has been financially closed. Which answer best applies to this scenario? A, in order to receive reimbursement for this expense, you must send a request to your Division of Grants and Agreements grant official to reopen and extend the award. Or B, in order to receive reimbursement for this expense, you must submit an adjustment via ACMS, provide a justification for the adjustment, and maintain appropriate supporting documentation in the event this expense is audited or selected for additional advanced monitoring. The answer is B. Adjustments to financially closed awards are permitted when reimbursement for expenses incurred during the award project period. A request to reopen and extend the award is only required when new spending is required. And the adjustment can be performed here as displayed on Step 2, the tab Step 2 Adjustments. You would simply enter the award ID, click Validate Awards, and you would be returned an eligibility status message on whether the award is eligible for adjustment. There are a few limitations for adjustments to closed awards. The payment transaction totals submitted via ACMS must be equal to or greater than 0. This means your institution must be able to offset the return against an available award that requires payment. If such an award is not available, the funds must be returned either through pay.gov or via check. Furthermore, there are these additional restrictions enforced by the system. Adjustments against an individual closed award must currently be greater than or equal to plus or minus $1. Upward adjustments via ACMS, which these are the additional payments, are available for 14 months after the award is financially closed, or in some cases a shorter period if the funding appropriation cancels prior to the end of the 14-month period. In most cases, this would translate to be 18 months past the end date of the award period of performance. Downward adjustments via ACMS, also known as returns or refunds, are available until the funding appropriation cancels. The eligibility check will indicate whether the award is eligible on the adjustment form of the payment transaction. We've talked a lot about money going out of NSF, but what about money coming in? If your organization needs to remit funds to NSF due to a positive cash on hand balance, the remittance can be completed in one of 3 ways. You can use ACMS like we just discussed, or you can use pay.gov or by check. Within ACMS, as long as your overall payment request is a net positive, you can submit a credit against an award as an offset to the current payment request. We cannot, however, accept a net negative request through NSF across one or more awards. If ACMS is no longer an option for a particular award, for instance, the grantee does not have another open award to offset the credit against, submitting remittances to NSF online through pay.gov is strongly preferred. This allows remitters to make secure electronic payments, and it decreases the processing time associated with receiving and processing a paper check. Now, check is our least preferred method. We have experienced significant delays in processing manual checks during the pandemic, and we still have not returned to normal timeframes in this specific business process. Further, there is an NSF and government-wide shift to reduce paper checks as much as possible. So we encourage you to utilize one of the 2 electronic methods if possible. We have received some personal feedback from some of our grantees on constraints that prevent their organizations from using pay.gov. For example, if your organization is part of a state-managed treasury account that doesn't allow an ACH debit into the central bank account, or some other restriction that your organization has. So we get that. But we have been collaborating with the Department of Treasury on this specific scenario, and how we can accommodate this common requirement within our efforts to reduce check volume. And so there are some newer platforms that they have been successful in utilizing with some of our customers that have similar constraints. So we are launching a small pilot to test the feasibility of this alternative platform for our customers. And our team may be reaching out to you or some of the organizations to gauge your interest in participating in this pilot if you are a frequent remitter by check, or you've indicated to us previously that you are unable to use pay.gov. But if anyone listening to this is interested in the pilot, please reach out to your assigned payment specialist for more details, and we would be happy to include you in the outreach. Now, if you are using pay.gov for the first time, you must contact your financial institution to whitelist NSF's account to debit the remittance. This often means that your bank needs special permissions depending on the configuration of the account. The specific detail on this slide is also in our grant FAQ, but you would typically need to provide NSF's identification number to your bank in order for them to whitelist NSF to be able to perform that debit. Next, I'm going to talk about canceling appropriations and some year-end critical dates. Well, actually, before I get there, let's talk about one more thing. What if you need more time? So no cost extensions. There are some limitations on no cost extensions. If your award is fully expended and you have zero remaining balance, it cannot be extended. We do not allow for awards to be extended just to use up remaining funds. So there needs to be still a purpose and a need for those funds to be used to accomplish the goals of the grant. If this is your first no-cost extension, you can submit that as a grantee approved no-cost extension at least 10 days prior to the award end date. If you miss that date, or if it's a subsequent no-cost extension, it would need to be submitted as an NSF approved no-cost extension. NSF approved no-cost extensions may be submitted late, but you'll need to explain why it's being submitted late. And if the only remaining funds that are available on your award are impacted by canceling appropriations, an NCE, a no-cost extension, will not be granted because the no-cost extension cannot extend the period of availability of the underlying appropriation. I'll get into that a little bit more in the next section. So, why does understanding appropriations and appropriation law matter to you? NSF appropriations are what we utilize to issue grant awards to your organizations. It's the authorization we receive from Congress to spend the money. And NSF appropriations must comply with the public laws. And the public law requires all federal agencies to close fixed-year appropriation accounts and cancel any remaining balances by September 30th of the 5th year after the period of availability. So for most NSF appropriations, the period of availability is a 2 fiscal year period, but not necessarily 24 months. So each fiscal year, we end up needing to return millions of dollars of obligated funds back to the Department of Treasury because they weren't used in a timely fashion. Here's an example of that public law I just described, where if we have a 2-year period of availability, you can see here that it would be open for us to make new obligations against the appropriation in 2017 and 2018. We would then have 5 years after that period of availability to expend obligations that had been made. At the end of that 5th year, the funds would expire completely or cancel, and we would have to return the remaining funds back to the Department of Treasury. So For fiscal year 2023, which we are currently in, this means that any unspent appropriations from 2017 will be canceled by September 30th of 2023. For most of our grants and cooperative agreements, this will not be an issue because most standard grants are issued for a 3 to 5 year period of performance. Typically, only awards that have experienced delays and are in subsequent no-cost extension periods, or there's been slow spending on awards that received multiple funding or funding from multiple years, will be impacted by this problem. It's typically only about 1% of our awards in a given fiscal year, but it can be quite impactful for those award recipients, especially if they're not familiar with this concept. So you might be asking yourself, how will you know which awards will have their appropriations canceled this year? Well, we try to make that easy for you. When reviewing your awards in ACMS, you can easily identify any awards that are impacted by canceling appropriations because there will be a red flag, as demonstrated here, next to the award number. Also, beginning every January, we start sending email notifications to the ACMS points of contact at the institutions that have awards with canceling funds. These emails do not go out to everybody involved with the award. We're not sending them to every single PI. We send a consolidated single email to an institution that lists all the awards impacted. So we're going to send that notice to a central administration official. And we ask that that ACMS point of contact be that liaison to communicate the impacted awards out to the necessary stakeholders at your organization. So if you receive a list of 2 to 5 awards, we ask that you liaise with the various principal investigators and department staff that are responsible for managing those awards that it is impacted by canceling appropriations. These emails will continue to be sent monthly through September or until the award has been closed or fully liquidated. Another impact to the year end is that the ACMS system will be temporarily unavailable around 4 to 5 business days prior to the end of the fiscal year. This allows us to do and perform our own year-end close activities. So awardee organizations will not have access to ACMS payment process during this period. Our goal is to have ACMS available beginning on the first business day of October after this period. This can be particularly impactful for awards that are impacted by canceling funds, especially if your award has been granted a no-cost extension all the way up to the final day of availability, which would be September 30th. As you can see, you might have to estimate what your PI's final expenditures would be, get that payment request in before the system closes down, and this critical date for 2023 will be September 25th at 2 p.m. Because the award will not have the typical 120-day final closeout period. As I mentioned before, no-cost extensions will not be processed or approved for awards that solely have canceling funds. A no-cost extension cannot be utilized to extend the underlying appropriation. And so we get this question a lot, that will your organization still have 120 days to submit a final cash payment request for awards that were impacted by canceling appropriations? So I just want to reiterate this. You will not have that 120 days, not for the funds that were impacted by the cancellation. So awardees must complete their final cash draw for these canceling awards by September 25th at 2 p.m. For fiscal year 2023. Let's take a look at a case example here. In some instances, an award might receive a no-cost extension past the date of canceling funds. I want to kind of dig into why that might occur. This can happen if the award has received funding from subsequent years, funding years. It could be a supplement that the award has received, or the award could have been incrementally funded from the very beginning. So let's take a look at the specifics of this case example. A university is managing an award with initial funds obligated in FY 2017. There was subsequent funding that was received in FY 2020. The university received a no-cost extension for the award that extends the period of performance from May 31st, 2023 to May 31st of 2024. However, during the spring of 2023, the university receives a letter from our branch notifying the university that the award has canceling funds, which will cancel September 30th of 2023. Think to yourself, true or false? Can the university just ignore the canceling funds? The Payments and Analytics branch must have made a mistake in sending the notice, because we have a new end date extending past September 30th, 2023. This is false. Our notices will indicate what portion of your award's remaining balance is impacted by the canceling appropriation, and it will indicate what portion of the funds will not be impacted. In some instances, this can be quite shocking. So let's take a deeper dive into this example. Let's put some numbers behind it. Let's say, for example, your organization received $250,000 upfront. The supplement was a small amount of $25,000. Your PI requested a no-cost extension because they had $100,000 remaining. They might think, great, it got approved. I have until May 31st, 2024 to spend my remaining $100,000. In this scenario, they would actually only have until September 30th of 2023 to spend $75,000 of that remaining $100,000, because after September 30th, the only portion of funding that would remain available for the PI would be the portion of that supplement, the $25,000. We hear about this every year when it comes up. It can be quite shocking to PIs when they learn about this, and so that's why we try to communicate this out. We send out numerous notifications to your organization. It's important to not ignore those notifications and to be that liaison and communicate with your PI. And again, if you have questions, ask your payment specialist. We're happy to help explain it. Here's just a quick another look at the scenario. This just kind of illustrates the life cycle of the appropriation. Those 2017 funds were open and available for the first 2 years. We had 5 years to liquidate them. The supplement had an open availability from 2020 to 2021, and then we have 5 years to liquidate that. The no-cost extension that was granted in the use case does not extend the appropriation availability for that original 2017 funding. One more use case. We really want to hit this topic home. So if you find yourself in that situation where you were granted a no-cost extension to May 31st, 2024, you had $100,000 available. Let's change the numbers a little bit. 50,000 is canceling in September. And you estimate 30,000 of those canceling funds will be spent. and you would like to request an advance payment of those funds prior to the ACMS shutdown period, how much should your advance be for? A, 0, because advance payments are not permitted. B, 30,000, advance payment should be limited to the expected expenditures. Or C, 50,000, because you want to just draw down all of the remaining funds so that you can allow the PI to continue spending the remaining 20,000 after September 2023, since the new award end date is May 31st, 2024. The correct answer is B. Advance payments are permitted. However, we suggest that you're able to support the advance that you are requesting. Organizations are cautioned against advancing remaining funds simply to expend remaining balances. This is something that has happened in the past, and when these awards were audited, those subsequent expenditures were deemed unallowable. So it would be inappropriate to request an advance payment of canceling funds simply to allow further expenditures to be incurred after the September 30th cancellation date. The use of canceling funds for expenditures that are incurred after the cancellation date is not allowable. And also to just reiterate, in general, advance payments must be limited to the minimum amount needed. The timing of advance payments must be in accordance with the actual immediate cash requirements of the grantee in order to carry out the purpose of the approved program or project. The timing and amount of advance payments must be as close as administratively practicable to the actual disbursements by the grantee for the direct program or project costs and the proportionate share of any allowable indirect costs. It is important to remember that the process for determining advance timing, the period the advance covers, and the amount requested should be based on a justifiable estimation basis, so it can be supported in the event of an audit. Next, I want to cover some reporting updates and system enhancements. Here's another use case. After 20 years, Bob is retiring. He has been your organization's primary point of contact and expert for managing NSF awards. And this responsibility is now transitioning to you. You need to request a payment using ACMS. However, your management has not established an NSF user ID with ACMS permissions in your name. What should you do? True or false? I can continue using Bob's NSF user ID and password to access NSF systems because he left me a post-it note with that information. There's no need for me to bother anyone else with such a trivial request. False. Each user is required to have a unique ID, and we suggest that you never share that ID or password, and you should only have one account per user, even if you are servicing more than one organization. And we also do not permit group user accounts or passwords to be set up. Program income. As I briefly mentioned earlier, we don't require the submission of the SF425 FFR, and because the majority of the information we would collect via that report is collected via ACMS. However, one component that we don't collect via ACMS is program income. So to supplement the fact that we don't collect the FFR, we require an annual submission of a program income report for any active awards within the federal fiscal year that is being reported on. So the most recent submission was for FY21. The current submission period is for FY22. Submissions are typically due by November 14th of each year. So we are currently active in that reporting period now. We do conduct a program income webinar, which digs deeper into this topic, and we make that recording available on our website. So if you're interested in learning more about this, please visit our website and watch our latest webinar. Just to give you a quick snapshot of it, though, you might be asking yourself, what is program income? It is gross income earned by the awardee organization that is directly generated by the activity that is being supported by the NSF grant. This would include things such as fees for services performed, the use or rental of real or personal property acquired under the grant. If your grant is fabricating commodities in some sort and you're selling those, the proceeds of those sales would be considered program income. However, interest earned on advances of federal funds is not considered program income, and the payments or the reimbursements you receive from your submissions via ACMS, so those reimbursements for the grant funding you're spending, that is not considered program income. We have a couple different treatments for program income. The standard treatment is considered additive. This means that the income earned can be retained by the grantee and added to the funds committed to the project, thus furthering the project objectives. And the other treatment is considered special treatment, also referred to as deductive. That only applies if it is added to the terms and conditions of a specific award. And that would mean that any program income earned must be remitted back to NSF by crediting costs otherwise chargeable against the grant. Again, our program income webinar digs deeper into these topics, and if you'd like to learn more about that, I would encourage you to go out and watch that. The next piece that we need to do to support the fact that we don't collect the FFR is we still need to calculate an estimated cash on hand and enter an accrual on our own financial statement for the end of our fiscal year, September 30th. Because that is an estimated accrual, we then are required to validate the accuracy of that accrual each year. And we perform an annual cash on hand validation. This is not an audit. We simply send out a survey asking the selected institutions to respond to the survey, indicating what their cash on hand was as of September 30th of the given year. So for example, last year we sampled 508 institutions. We look to get a higher response rate than this. Last year we only got 94%, but we are looking for closer to 100% response rate. Our validation last year yielded a negative 461 million cash on hand, and that was within 3.8% of our calculated accrual. So that's pretty accurate. That was a good result. We want to mainly talk about this to make you aware. So if you are selected in the sample and you receive the survey, it's important to respond to that survey in a timely fashion. It's pretty short. It's only 3 or 4 questions. And it's kind of the equivalent of completing line C of the FFR, where you would calculate the cash receipts that you've received, the cash disbursements that you've outlaid, and the difference would be the cash on hand. That figure is what we are asking for in the survey. It should be a pretty simple response. All right. Recent uniform guidance changes now require federal agencies to post overdue project reports at the time of award closeout to a public-facing repository of poor performers. And this system is called FAPIS, the Federal Awardee Performance Information and Integrity System. So this means If the required reports aren't submitted within 1 year of the period of performance end date, so your annual performance reports, final performance reports, or project outcomes reports, the federal agency must then close out the award with the missing reports and report to FAPIS the fact that the organization failed to comply with the terms and conditions of the award. Now, FAPIS records are based on entities. So these are the award recipients, the colleges and universities, and not based on individuals. So it's not the PI. So even after a PI has left your institution, it's still your organization's responsibility to ensure that all required reports are submitted in accordance with the terms and conditions of the award. FAPIS records remain in the system for 5 years and then are archived. And all federal awarding entities are required to evaluate an entity's record in FAPIS prior to issuing future federal awards. So don't wait until it's too late. No one wants to get reported in FAPIS. Now, the specific citation in Uniform Guidance, if you're interested, is 2 CFR 200.344, and it's called closeout. And so I just give you this reference for your information, and you can look into it further if you would like. One last update here with our systems. We recently went through a modernization to collect banking information for certain external individuals. I wanted to make you aware of this. It does not impact organizations. As you may recall earlier, I said for organizations that are registered in SAM, we collect your banking information from your SAM registration. However, we do issue some awards to individuals such as postdoc fellowships or honorary award recipients. We might also invite folks to travel on behalf of NSF, or there might be some other miscellaneous payees that are receiving a cash prize. This module called Individual Banking will be visible on research.gov, but I bring this up more so as to avoid confusion. We've already gotten a few questions where people mistakenly think they can go in as a SAM organization and try to update the organization's banking information via this portal. That's not the case. If this portal is not for you and you click on it, you'll receive an error message indicating that it's a restricted page, and you should only be accessing it if you received an email notice giving you instructions to do so. And we give you this reminder here that organizations registered in SAM must update their banking data in the SAM profile. I'm going to conclude today by covering a couple innovations that we've been exploring. We've been looking to optimize our resource allocation and improve some of our oversight processes. We've been exploring, for example, enhancing our payment processing capabilities with distributed ledger technology. We've also been improving our analytics abilities by producing visualizations. And then we've also been exploring how we can use a natural language processing AI to help conduct some oversight. As you can imagine, we as NSF issue about 11,000 new grant awards per year, and we have an active portfolio ranging between 45 and 50,000 grants. That provides a wealth of operational data. And so we've been looking for ways to optimize how we can analyze that data. And so how can we shift away from the use of simply Microsoft Excel, Access databases, or Canon system reports to more automated processes using robotic process automation, custom visualization dashboards, and most recently, AI and machine learning. So I'm going to take a deeper dive into a specific use case we've been exploring, monitoring spending against a grant, and show the evolution of how we've applied this technology. To start, I want to kind of set the baseline. So for years, we have been providing a notification to our grant recipients when they have an award approaching the final 3 months of the period of performance and they have a large outstanding balance. For now, we've defined what a large outstanding balance to be as 75% or greater balance remaining with only 3 months left. This is usually an indicator that there's some kind of issue with the burn rate, how fast the PI is actually able to spend their money. It could be an indication that a no-cost extension is needed because of the delays that are being experienced. And so we send this notice out as a courtesy to encourage PIs to reach out to their program or grant official to discuss their specific needs. We've been taking that specific use case and modernizing our analytics abilities. So using Tableau, which is a business intelligence software that helps users visualize data and understand the story within their data in new ways, we created this burn rate explorer. So it uses data visualizations to quickly identify grants that are spending differently from their peer group. So there's a lot going on here visually, so I'll take a little time to dissect it. The purpose of this dashboard is to track unliquidated balances, so the funds remaining on an NSF grant, against its period of performance. So this scatter plot that you see in the center maps each award based on the time elapsed in the period of performance, which is shown on the horizontal x-axis, and the funding spent on the grant, which is shown on the vertical y-axis. This we refer to colloquially as the burn rate. We can narrow in or zoom in on a specific subset of this scatter plot to look at awards that might be spending slower relative to their peers. So you can see some examples here where grants are close to 0 to 5% spent, and they're more than 70% through their period of performance. To further this specific use case, we've taken the awards identified in this particular quadrant of the scatter plot, and we've then funneled this into an AI tool called Lingo4G that uses natural language processing to analyze the unstructured text in NSF documents, such as its progress reports. So in simplified terms, this AI algorithm parses the text from these progress reports into words and phrases similar to how we as humans would process it naturally as we read it, using our own vocabulary and reading comprehension skills. And what we're doing is we're looking for patterns across grants with potential spending delays using this AI to identify meaningful themes and root causes. So once we have these awards identified, and again, kind of walking through this scatter plot, I can identify in less than 30 seconds, roughly about 3,000 awards, as you can see here, that would benefit from this additional analysis and processing. So kind of digging a little bit more into how Lingo4G works. Paragraphs and sentences are pulled out of the NSF progress reports and placed in a structure an algorithm can follow. That algorithm then takes the text structure and chops it up all the way down to words, and it bounces those words against dictionaries to define the parts of speech and uses and puts them into clusters that are similar. Here in this visualization, we're looking at a tree map that shows the results of these text clusters. The size of each cluster represents the frequency of similar words that are used across the progress reports. Other demographic data is further used to color the shapes, or identify other commonalities across the clusters. We could then take this further and view the same information in a topographical map view. Here we can see the same text clusters represented in a multidimensional scale, meaning the visual representation of distance between peaks show how common themes may relate within the reports, and the higher peaks indicate that the terms that are found are occurring in a higher frequency. Here we see terms like lab closures, travel restrictions, recruitment impacts, and again, these are all related to awards that are spending slower relative to their peers. As we zoom into this area of the map, we can see terms such as physical distancing, remote teaching, young children. In other words, in a matter of a few minutes, we have been able to find evidence of the human-centered impacts the pandemic has had on our researchers. These researchers have been juggling to balance work and life responsibilities all under one roof, and have experienced reduced access to the labs, resulting in significant delays in spending. So this tool has allowed us to analyze thousands of grants in near real time, basically in the amount of time it would have taken to research a single grant award using our previous mechanisms. So this particular use case is still in its experimental phase. We haven't quite operationalized it yet, but kind of tagging on to that, we are looking for future opportunities to engage with our grant recipients and rolling out some additional soft monitoring activities using this kind of data to identify areas where there could potentially be spending delays or concerns, and seeing how resources NSF has could be used to help. As I mentioned earlier as well, we're going to be looking into conducting an electronic remittance pilot. So if you're interested in participating in that, you can reach out. And I just wanted to reiterate that our FAQs were updated recently for FY 2022, and they are available on our website, and I encourage you to go out and access those. If you have questions, you can reach out to your payment specialist. That contact can be found on this website. That is also the same website you'll find our FAQ. And we also want to encourage you to take a look at career opportunities at NSF. NSF is a great agency to work for, and consistently rating very high in the Employee Viewpoint Survey as one of the best places to work in the federal government. So with that, feel free to reach out with any questions, and thank you for your time today and watching this episode.